Look, there's no doubt many people are feeling the pinch right now, but what if you're not quite scraping the barrel and maybe just need some guidance on how to stretch the pennies? Money Sweetspot calls itself a new social enterprise, consolidating debt and helping provide financial education. Money Sweetspot CEO Sasha Lockley joins us now. Morena, Sasha, what is a social enterprise when it comes to helping me stretch the budget, get rid of the debt, consolidate these loans?
All of those things.
Yeah.
So as a social enterprise, the only thing we do is help people out of high cost debt. And we celebrate when we lose customers because they're out of debt and on with life. And the other way that we're different really is that by engaging in financial education, people also get out of debt quicker by extra money off their loan. So we reckon that in this environment, people are working really hard and juggling lots of things. And why shouldn't people be able to get out of this debt rather than being defined by it and it being really painful experience for people?
So you're talking about the concept where people have maybe signed up to a car loan and a couple of hire purchases and maybe the credit card's getting a bit out of control.
Yeah.
So they've been able to get into the debt, they earn enough money, but now the brakes are on.
Yeah, exactly. So people can be paying up to 48% interest.
What?
I know. It's
48%?
crazy. 48% interest still exists.
Are there laws against this?
There are laws against it, but there are still lenders out there that are charging 48% interest on a loan, and they are customers that we've been able to help.
Oh my God.
Yeah. Yes, so they're still there. So it is credit cards, car loans, buy now, pay later is in there as well. But people could have had something unpredictable happen because life isn't predictable. So they may have been able to afford it when they took it out, and then maybe they got sick, lost a job, interest rates went up on their mortgage, and then the juggle becomes a struggle.
You just mentioned buy now, pay later. How much of that makes up people coming to you saying, help?
There's a lot of buy now, pay later in our customers across multiple providers. And so I'm not against buy now, pay later if people can buy now and pay later. But what we see is that more and more people are adding to those individual purchases. And what people tell us is that it's really hard to keep on top of it because you might buy something on a Monday and then on a Wednesday, and those payments can be all coming out at a different time. So the juggle is kind of, I'm not really sure where I am.
We've got the problem where we always think, oh, I got a $100 or $1,000 bonus, and you spend it 3 or 4 times, right?
Yeah.
You think, oh, I'll put it towards that. And then you put it towards 3 or 4 things, and actually you've spent it too many times.
Yeah, exactly.
And so people come to you, and you've just mentioned mortgages as well. So talk me through the consolidating. Do you pay off all their debts and then you take it on? And what sort of interest rates are you charging?
Yeah. So we'll pay off all consumer debt. So we don't touch mortgages, but we do touch car loans and credit cards up to $40,000. And our interest rates are between 10 and 21%.
And how does that compare to your competitors in the market?
Yeah, so our average at the moment is 13.5%, and the customers that are coming to us are paying closer to 30%. We're able to do that because our investors are charities, so we don't have a profit motive. We've said that we just want to be around for as long as New Zealanders need us. And because we only do one thing, which is just the financial reset, just the debt consolidation loan, that means that we can be really focused about how to help people.
Do you still make a profit?
Yeah, we make a profit to be sustainable, so we don't have a profit motive. Our investors came on board. You can imagine trying to raise money from investors where you say, I don't want to be the biggest, I don't want to make lots of money, and I'd like to lose customers. And they're like, okay. So that took a while. But now we've got investors that are focused on the mission of getting people out of high cost debt and making enough money to make sure that we're not bankrupt and we can keep helping people.
How many customers have you lost?
2. We've only been here 3 months, so we only opened at the end of March.
Yep.
And the people that we've lost have been able to go into their first homes and refinance their mortgages. So they're really good news stories. And people can get out of debt as fast as they like with us. And that's another thing, I guess, is that in the industry, people still charge what I would call silly fees. So
what's a silly fee?
A silly fee is paying a fee if you want to pay extra on your loan or repay your loan early.
Right. And so what happens if someone comes to you and they're paying those 48% and things like that, and you go and say, okay, we're here to tidy it up. Are you having to pay those silly fees?
We have to pay whatever the balance is owing for those customers.
And how bad are those silly fees?
Well, we don't see the total silly fees in the settlement amount, but if you think about it, lots of places will charge an admin fee every month, an account management fee, a default fee if you miss a payment, default interest. And I think it's a bit silly because if people haven't been able to pay their loan, why would we make the amount that they owe even higher.
How do you feel talking to those people when you call them up and you know they're charging exorbitant amounts for interest, and you can see on this person's statement when they've come begging to you for help that there's a default fee and an admin fee? What's it like talking to those people? You know that they're just basically flipping the ticket.
I mean, I don't get to talk to those people. And I'm not going to say that all lenders are bad, because they're not. There are responsible lenders out there. The 48% lender is an exception. You know, there are good finance organisations. But we do encourage people to have better conversations with those lenders and to see what they can do around those settlement fees. Try and get them as low as possible, those settlement balances as low as possible, so the loan with us is at the lowest amount possible too.
Sasha, what's the common theme that you're seeing from people who are coming to you? Is there a certain kind of debt that they're getting into? Is it a certain amount of debt? What's the crunch point that they've come to you and thought, I can't do it any longer?
Yeah. Credit card debt at the moment, and kind of, I think over the COVID period, ending up at that limit of the credit card amounts is definitely a thing. Again, the buy now, pay laters is a thing. And I think it's kind of, we all assume that it's going to be all right until it's not. And it becomes this kind of juggle, and we're like, okay, I'm great with 5 balls. And then it might be that the kids were sick, or it might be that you ended up needing to go to the dentist or the vet. And that one extra ball means you drop them all on the floor. And
is this because we don't have a savings account where we just put a little bit aside each month? Because we've got Kiwi Saver, but maybe we haven't thought, just in case.
Yeah, most people don't have an emergency savings account. And if you're paying 48% interest on a loan, maybe pay it off that instead of having the emergency savings. So I don't think it's as simple as saying have an emergency savings fund. And I think it's a bit, especially in this environment, asking people to put money away. But yeah, having little amounts of money that mean you can navigate shocks and have...
and little could be like $5 a week,
literally,
right?
It's not about the amount. It's just the habit of saving is what we talk about. And
that roundup system you can sometimes do off your brilliant card.
Because then you don't notice it. It's kind of, almost unconscious.
If you were going to spend it anyway, you were going to round it up. Just quickly, last question. We talk about buy now, pay later and things, but what happened to the good old APRO or lay-by or things like that? I know it didn't cost you to do lay-by. Why don't people do lay-by?
Well, I think it's the beautiful experience of, I've sat at home on
instant
gratification gaming kind of, especially right now, you feel a little bit better if you can just go, I'll just buy that. Treat yourself.
Some good advice there, Sasha. Thank you so much. Sasha Lockley from Money Sweetspot. Hopefully you don't get any new clients out of this segment. I wish you all the best.
Thank you.